Hi everyone. In this video I would like to discuss a special purpose account or fund called a petty cash fund. Often companies have small amounts to pay for items such as postage, office supplies, etc. throughout the week or throughout the month. And although they could actually go to through the process of getting a purchase order and having a separate check cut back for each of these expenses, sometimes that's not the practical way to do it. And the most convenient and easiest way sometimes is to establish what's called a special cash fund or petty cash fund. And so the way that you would do that, the treasurer would actually write the check out for the amount that is estimated to be in, that should be in this petty cash fund, and they would go get this check cashed at the bank, bring the cash back, and turn it over to someone, another employee, who is called the petty cash custodian, or they might be called the petty cash guardian. And so this person is responsible for the amounts in this lockbox. It could be as simple as a lockbox, and at any given time, either the amount that was established for that fund should be in the fund, in the box, or some amount of dollars left over, dollars and coins left over, plus the receipts should be in that box. So let's look at the journal entries that would be required to first let's establish the petty cash fund, and then we will replenish it. So on March 1st, the treasurer of Kesey Corporation established the petty cash fund. So we're going to debit the petty cash fund for the $300 that we're told that they're going to write this check for. And then we're going to, remember, on your credit side of the entry, you're going to indent a little bit. So we're going to actually indent and then credit the cash account. So petty cash is also an asset account. Now let's look at how this custodian would get the account replenished. So at the end of the month, the end of March, the custodian counts the coin and currency on hand, determines that there is $126.50 still in the box. And they also have these receipts, one for stamps, one for delivery service, one for paper goods for the office product. So I've used Excel. I've just listed each of them. And then let me just show you how to do this. I've just selected each of the items, pull down. Over in the top right hand side, you see this little symbol for auto sum. So I just auto summed it and I get $169.80. But let's go right here to the right hand side now. So we're supposed to have, the custodian is supposed to have $300 in the account. $126.50 is in the account. So let's subtract that from the $300. So this is the amount that the check will actually be written back for. I'm just going to write check for this amount. So when everything is presented to the treasurer, they're going to actually bring you back $173.50 if you are the custodian. However, let's also go ahead and now subtract the amount of these receipts. So I have receipts, and notice what I did. I just put in equals a minus sign because I do want it to subtract, and now I'm clicking in the cell and I get $169.80, and that has just moved over. So I want to subtract that amount from the $173.50, and when I do, I see that I am actually short on this account. Hopefully just miscounted, $3.70. So the good news is we have this special account, you see it highlighted below, that is called the cash over and short account. This account shows up on your income statement, and it will actually adapt to either the shortages or the overage if you should happen to have an overage. So now let's prepare this journal entry. So we have postage. I've just listed it here on the left side, just like it's listed with the receipts. Pretending I am the treasurer, right? This is not the petty cash custodian making this particular journal entry. This would be the treasurer. Let me stretch it out for your words. So postage expense, delivery service expense, paper good expense. I'm just listing all three of those. And let's use Excel again and just pull it down and do an auto sum there. So $169.80. So that's what we said it was up here. So we're good. Now we know that we're going to write the check back for the $173.50 because we have got to bring this account back to $300. So $173.50 is going to be on the credit side. So if I were to just total on both sides, I have $169.80 in debits, $173.50 in credit. So this is not okay. This is where we're going to need that $3.70 to balance out this account. So when I put that in, and notice it's listing on the left side, so it counts as a shortage. The shortage is much along the lines of an expense, so you can think of it that way. Now the debit and the credit equal, so this is good. I'm going to actually take those amounts out because I don't want those showing up. If I'm the one preparing these entries, I don't want that to show up in my journal. Okay, now I've got the dates corrected. I had to do a little different format. So this was actually at the end of March, March 31st, and this was established at the beginning of March, on March the 1st. Okay, so now let's look at a what-if scenario. What if Kesey decided that they wanted to increase this petty cash fund to $400 instead of just $300? Perhaps if all or almost all of the funds were expended throughout the period or before the end of the month, then they might want to do this. So if they wanted to increase to 400, remember that it's already established for 300. So in this case, we would just add another 100 to this petty cash fund or petty cash box by debiting the petty cash and then crediting the cash account. So again, the treasurer would go down and get this check cashed and bring it back, and it would be added to the box by the custodian. And here I want to look at another what-if scenario with you, and in this case it just shows a different application of the cash over and short account. Remember, this account is going to absorb those small overage and shortages that occur in this petty cash account. It will show up on your income statement. So in this case, going back to the $300, which is what the account was initially, I keep calling it an account, it's a fund, what this fund was established at. And in this case, let's assume that instead of $126.50, we have instead $131. So subtracting that, now the check needs to be written for $169 even. But we had receipts that totaled, let me type in this word, so if you're looking back, you'll remember what that is. The receipts total $169.80. So now in this case, we are over by 80 cents. So let's prepare that journal entry. We still have the delivery expense, the postage expense, paper goods expense, and let's go ahead and get our check amount in. It's going to be written for $169. I think it's good to make notes on these so that you remember what you actually need to write the check for. Otherwise, you might actually end up writing it for the $169.80, and in this case we don't need the full $169.80. In the prior situation, we needed $3 more, $3 and some odd cents. Was it $3.70 more? Okay, now let's tally up both sides. When I tally up down on the left-hand side, my debit side, I get $169.80. And of course, when I look on the right side, I have just $169. So this is where I'm going to need to credit that 80 cents. So instead of debiting like we did in the prior action is in balance, so that's good. I'm going to clear that out. But remember, this is on the credit side of the entry, much like a revenue would be. Before, it was a shortage, and it showed up much like an expense would on the debit side of the entry. Okay, so again, this is just a what-if scenario. This one shows when you're over. The first scenario showed when you were short. This concludes your petty cash.